Why are we seeing vacancies rise in a country that has not enough housing?
I think there's a lot of things going on. I think first of all, Ontario's population is decreasing right now.
That's true.
Which is insane, by the way. We could talk about
despite
that on a whole other
the
episode.
national immigration, Ontario's population is actually full out decreasing.
Yeah,
So that hurts.
Dave came in and gave me this big spiel.
Yeah, I don't want to. We can do a whole podcast on it.
I went home and ate a tub of ice cream.
Yeah, I'm writing a blog about it. So
I would say so. My take is, and yes, that's definitely a factor. But like one of the bigger things is people just look at what it costs to live, and then they said, "No, I'll just go live with family. We'll go get a place together." So the amount of units needed to house the population shrinks because people are willing to compromise on their living situation. Welcome back to REI Hot Seat. Andrew Hines here with Jacob Campanaro and David Hulshoff, and we're talking more buildings, 12-plex.
Jacob and I are in matching uniforms to show we are a united front.
Yes.
Right?
That's it.
Good looking.
That's why we did this?
That's it.
Yeah.
Good looking shirts.
Yeah, Jake got them. Classy.
Andrew, yours is in the order in the mail.
What are you, extra large?
No. Normally, I'm a medium tall, which is why every shirt fits me like a belly shirt because no one makes medium tall. But
large tall is a good. Like I do extra large tall is what I
need a tall size, but I'm usually a medium.
Yeah.
And that's like
because I don't want the belly when I do this, right?
Oh, yeah, it's the most frustrating thing. Like literally, my 80% of my closet is that.
Yeah.
And I just I don't want to wear any.
Well, one wash and you're screwed.
You got to hang dry, boys. Don't put it in the dryer.
We got a clothesline out back. It's actually really nice. Yeah.
There
you go.
Laundry tips.
There you go.
That's why
you tune in for a little bit of everything here.
That's what you came here for. So purpose-built 12-plex?
12-plex
right?
in Waterloo. Yep.
All right, so let's hear about it.
It's wild because 11 of the 12 units are 3-bed, 2-bath. I don't know the last time you have heard a suite mix like that in a purpose-built building, but
yeah. Never mind 3-bed, 2-bath is like
unheard of.
Because there's 3-bed, 1-baths, right? Where they just take the floor plate and they go, there's a little bit of extra room.
So those should lease up real easy, you would think.
Yeah.
And I mean, although 3s are a little slower than 2s to lease up, right?
You know what's funny though? I think just based on how many condos were being built with 500 square feet, 400 square feet, those micro units, it's the townhomes and the larger footprint ones that are actually gaining a lot of traction, right?
So this would be a spacious unit. Like how many square feet are we talking?
I'm not sure. I haven't been through it.
Do you know like age of the building approximately?
80s built.
80s. So they would still be the larger units back then, right?
And so do you... This is rapid fire, but
I like it. This is good.
Is it in a neighborhood of, you said Waterloo, right?
Yeah.
Is it maybe like historically student housing? That's why they did the 3 beds. Is it in that vicinity? Or?
Yeah, perhaps. Yeah, and I'm not trying to be elusive. I don't know too much of the interworkings, but yeah, I think that might be perhaps. Yeah. Anyway.
So could it still be used for student housing?
Yeah, it's close enough. Close enough. We need to get you a coffee.
Yeah. If I drank coffee. But yes, I would love one.
So seller wants 3.6. Typical process for me where I really start to like it. It's interesting when you get to these larger footprint units, and Jake and I have talked about this, even when you throw in commercial, it really does kind of throw your price per unit to a bit of a skew.
Yeah.
Right. So the price per unit at my price of $3.3 million is $275,000, which is on the more expensive end, especially as of late, on a per unit basis. But you're getting 3-bedroom, 2-bath, $275,000 a unit, definitely on the higher side, especially as of late to what we've been seeing on a per unit basis. But they're
bigger units, right?
I've never seen 3-bed, 2-bath across the board except for one unit.
So is it possible to really get an accurate rent roll on a product like that? I mean, obviously you're going to have some 3-bed, 2-baths in the city that you can reference.
Yeah.
But it's harder to find those versus like a 2-bed or a 1-bed.
It's a good point because for me anyways, I would like listen, if the prices were the same across the board, of course you would want the biggest, the baddest units, but a sub-mix of units is not a bad thing, right? You get, the 1-beds, the 2-beds, the 3s. So, market rent, we put at $2,400, which is, we took kind of what market is for what we see as 3-bed, excluding houses. So you have to do that in the analysis, and then kind of called that rent back, which we're just doing as a matter of course right now anyways.
I mean, it's definitely got student rental play written on it, although I'm not familiar with the town and proximity to the school and all that. But I mean, if it's anything like London, if you're along the bus route, you can pretty much do it.
Yeah, and we've been like, we entertained this question yesterday actually about buying properties around schools because of what's going on, especially with immigration and things like that. And, you know, some of these key markets, like Waterloo has Laurier and Waterloo, which are both pretty awesome universities. I went to Laurier, just a plug, so, you know, I'm favorable to it. But you're probably not going to see a massive drop off on some of those as opposed to some of the secondary colleges that are funneling, you know, a lot of students are funneling out of it.
Okay.
So anyways, bullish on it, like Waterloo.
I know. I used to be so into like the whole student rental concept,
Yeah.
and I had all student rentals, and so I had a conversation with a guy, and he's like, "Yeah, you know, school isn't necessarily forever. Like, look at the current generation, the problems they can solve just using YouTube and now ChatGPT. Like, what do you need school for? Like, unless you want to be a lawyer, a doctor, it's like." Now you really should just be able to solve these problems using the internet, using ChatGPT.
I listened to a podcast. It was talking about the commoditization of information. Because I think before you would get sick, you'd have to go to a doctor. Now it's like you're kind of preambling through ChatGPT to pre-diagnose. You're going in armed with an immense amount of knowledge. That's pretty systemic across every industry.
Oh yeah,
right. So having being the person with all the knowledge is less powerful than it used to be.
it's a crazy time we live in.
Right.
I feel like through history, though, there's always been ebb and flow of, you know, a surplus of blue collar trade, then a surplus of educated, then and it's flipped back and forth.
Now, if we really had that much higher education in the past, like it's been
good
like
point. Interesting.
1960s, it was like kind of rare to go to university, and then it just became a higher and higher percentage of the population went, and now it's like if you don't go, like that's considered the new high school, like that's the
Right.
new high school diploma, but that's going to reset, I think. So your point, like I think like people are just going to realize that's not really necessary unless you want to go work, which, I mean, if we're being honest, like a lower paid job than tradespeople make to go work in white collar downtown Toronto, you're going to make less and pay more to live down there.
Right.
Or you go work in the trade straight out of school and you make way more. So anyways, we did get derailed on our conversation here about this building.
we are talking about an apartment building.
That's cool.
This is a riveting conversation.
This is what people come for. At least that's what they used to come for the podcast back in the day. Or so I tell myself.
Well, okay, so kind of circling back to this, the current cap rate positions just under a 5.5 cap, which is our underwriting, which is conservative for sure.
Can we see the rents you're basing that on?
Yeah, so they're all showing at 1,700, which is obviously not the case, but the current monthly rent is accurate.
So 20,000 across.
Correct, yeah, and 244,000 and change. So it gives you some guidelines and context. Parking, that seems fine. Laundry seems a little bit high because we're usually 25 a unit.
Not to just skim over this though. So average rents. So there's going to be some that are 800. There's going to be some that are proper market 2,400.
Yeah,
and maybe even some a little higher because market rents come down in the last year or two. So there is potential for upward lift here on this building.
Yeah,
and with
over
a
time.
3-bedroom unit, sorry, just to the laundry comment, with a 3-bedroom unit, I would actually use closer to 30 to 35.
Oh, good point.
Because you're going to have
that's a great point.
more bodies, right? Like 25 is kind of your typical
Yeah,
1 or 2 bedroom, right?
Beautiful point,
You
Jake.
start going to 3, 4, 5, student rental stuff.
You're going to
the laundry
skyrocket
is much
that number,
higher,
and
yeah.
that's why that number is higher.
You're saying the laundry income is going to be higher.
The laundry income is going to be
because
higher.
there's just more people living there.
Yeah,
There's more laundry.
Yeah.
Right?
Yep.
If
Right.
one person is going to use, let's say, what, $20 a month?
Yep.
Right? Maybe not even $18 a month. 2 people use $25 a month.
You got to think
Right.
like what's a load of laundry? $4?
A lot, yeah. Well, you're going to be $250 minimum for wash, $250 minimum for dry. Most people are going to $3 per machine now.
Yeah.
Which is actually the standard, $3 and $3. Some people do $3 and $3.50.
Yeah.
So
Right.
you're making $6 for a full turn or
Yeah, so
$6.50.
so
you're
4
doing-
loads of laundry is $24 in a month. You're
Yeah.
going to do way more. I don't
And
know,
that's
I
one
do-
person.
I do way more.
Have we
Right.
have we factored how much it costs to run those machines though? Is that like still significantly profitable based on the energy consumption of them,
Yeah, like
or is that just breaking even?
well, we'd have to look at the utility bill and say,
Right,
okay,
utility
yeah.
captures
like,
it, right?
What I always find with the laundry, because realistically, like if we're talking actual management, you run the building, and it's something like this, you're probably just going to go collect that laundry money yourself.
Yeah.
Right. That's not going to the bottom line. That's going to buy your coffee.
Yeah.
And your whatever.
That's great
your car
coffee
cleaning.
money.
Yeah.
You go to a
Right.
car wash, you've already got coins.
Yeah. And that's so
Yeah.
like that's at least the way I kind of run my stuff. Right. which I do claim to CRA.
If anyone from the CRA is listening.
Of course we do. So that's a very valid point, though, because that number jumped out as expensive to me. But now that you pointed out, for sure, just a change in
It's
data.
interesting. It's just sorry, I don't mean to cut you off.
No, that was great.
Because we're doing a laundry mat deal right now. I've gone in the weeds with laundry, and to Andrew's point, like we've re-engineered everything to say, okay, we know this machine runs at this much power for this long. So we can actually go and look at utility bills.
Exactly.
We work it backwards now.
You don't even need to look at it. If you know the consumption of the machine, you can just figure out what it costs to run. But
but then we look at the power bill to say, are they running as much as they're claiming that they run?
Oh, yeah.
Because or in water, same thing with water. This machine
or
uses
are they
this much
pocketing
water.
it?
Or
CRA's new auditing technique there.
Yeah, it's pretty neat. So we're actually going out tomorrow morning. We got to go and do our one of our final inspections on the building, and we got to sit there and count receipts for wash and fold because they have somebody that actually does the washing, folding, and then it's
good business.
Yeah,
it's done right.
I will say that's very good on Jake to like just actually look at the numbers, because I found, like, I used to teach at Western, and just like when people would look at a financial statement, generally speaking, it's like they have a hard time putting numbers on a sheet into real life. Like, what does that mean? Like, why does that number say that? And
That's
some people just see a number on a sheet and don't ever ask it.
Whole thing is
that's one of my favorite things to do.
Right? Like that's why if you watch the tape, how excited I got by your analysis of my laundry error there.
Yeah. Well, it's even just like the process of getting that sheet, building the sheet, and then during due diligence, checking off each item.
Yes.
Right. Yeah. How much is how much is landscaping? And we go get landscaping quotes, 3 of them, and then we say, okay, we shaved off $5 on landscaping, right?
Yeah.
Click that, and so you build it out, and by the time you're ready to firm up on your DD, your due diligence. All of those items should have a check mark. That's my process at least. Is I have a physical check mark next to each line item in the performa, and
check it off.
And once it's checked off, then I go, okay, on to the next.
Well, this is like,
we're good to go.
For all the buildings I bought, and I'm obviously analytical, but having them in the sheet and messing around with them, and to your point, if we did this, how would that impact it? So by the time I'm firming up on the deal, like I know all those numbers. I've confirmed all those numbers. And we obviously help with that through the course of our clients buying it. But there's something visceral about putting it in the sheet and doing it yourself and engaging with it that kind of helps, right?
Yeah, I'm usually like that. Just give me my own spreadsheet. I'll throw your numbers into it. I'd rather just do it myself.
Like don't use the seller's numbers.
Jeez. Well, that's why our cap rates are almost always below what they say the cap rate is, right? Yeah.
But everybody knows that is watching this. You try to buy anything, the seller, any investment property whatsoever, commercial, non-commercial, they're always juicing the numbers. Oh, this thing makes $2,000 a month. Oh, did you take off property management? No. Well, he self-manages. What about utilities? Oh, don't worry about utilities.
Yeah.
Well, who was I talking to? Was it you, Dave? I was talking to somebody the other night, and they were like, yeah, we bought with an agent and we sold with an agent. And the numbers on the buy and the numbers on the sell were like wildly different, but it's the same guy doing the numbers. And it's like, hey, pal, what's going on here?
Yeah.
One of my favorites is maintenance. They just, there is no maintenance. It's a brand new building. Yeah, it's just newly renovated. There's no maintenance.
It's never going to break. Nothing's ever going to go wrong.
Yeah, we don't need to budget that now because it's new.
Yeah. Or buying from an older, somebody's owned the building for a long time, and you say, well, we've got to do an environmental. And they go, I didn't have to. It's like, sir, you bought this for $150. Of course you didn't have to.
I know a guy like that.
We need to do
he's
it.
Like, he's old Italian guy, and he's like, Jake, you can buy anything here. You tell me which building you want, I'll sell it to you. He goes, no conditions.
Yeah.
Right? And he goes, I didn't have conditions. He goes, if you're buying my buildings, you got to buy it how I bought it.
So your response to him is, if you sell it to me at the price you bought it for, I agree.
100%.
I agree.
Yeah.
Right, but then he's going to go down. I actually have asked them, and then he goes, "Well, but back then I worked for 10 cents an hour." Right,
Okay,
and then
so
you go down that road, right?
So say we'll do the modern day equivalent, and we'll do the inflation on the dollars and the adjustment, and then we'll pay that, and then no conditions.
And the guy's got a wicked
still
building.
way better.
It's like really nice.
It's always the older Italian gentlemen that say that, eh? Yeah, I can say that because you're here. So, so taxes. We'll go jump back into this. Taxes, actual property management. We put 5%. CMHC needs 4.5%. Utilities is actual. Vacancy 2%. Vacancy's moving across the board all over. So we start at 2%, and then as we draw closer to the deal, we need to update it accordingly.
Okay.
Obviously.
Now, sorry, Dave. I keep really good question for you though.
Like,
so you're using 2% in this instance.
Yeah.
if you go online and you look at CMHC vacancy rates, they're different.
Yeah.
They might be. I don't know, right? I actually don't know right now. What are you using for vacancy? Because I've gotten to this argument a couple times where some people go, no, you got to use the vacancy of the building, right? Is there one unit vacant, and how often
It's area vacancy.
And then it should be area vacancy.
Because if you use the vacancy of the building, you're going to be at like 15% of one unit's vacant.
I get it. Like so it's like and I hear all the different things. So you're using 2% here. Now, if we go to CMHC .ca and look at the vacancy for this area, right? I was just curious, why start with 2% and then adjust?
So everything used to be sub 2%,
correct,
across the board. So we just increased it and put it at 2 everywhere. So now the sheet automates 2%, but then when we find a deal we actually care enough about to discuss with people, we update it, as opposed to the
because 2 to 2.5 is not going to kill a deal.
But you'd be shocked at how much the variances have started now, right? So there's Kitchener, see, 3.5.
Yeah. Current vacancy is 3.5.
Yeah.
Gotcha.
What's Guelph? Guelph is 1.8. So.
Whoa. Big difference.
Yeah. And, further, shows the value of doing that.
Yeah. So anyway, sorry. That's just I was just curious why 2, and then where do you go from there?
2 is the standard in the sheet. Which ironically, I bet you if we looked at the average on that sheet now, the set point needs to move from 2 to.
Well, I know when Andrew built the almighty sheet, right? The one that everybody uses, except you. It was 2.5% res, 5% commercial. That was the golden standard of vacancy, right? As an autofill. Yeah. But that was probably 5 years ago now, 6 years ago.
Longer.
So next episode, I'll go through that CMHC numbers. We'll take the averages across the board, at least in perhaps the core of where we're doing most of our business, and see what it is.
So let's just unpack that for a second. So why are we seeing that in your estimation, Jake or Dave? Why are we seeing vacancies rise in a country that has not enough housing?
I think there's a lot of things going on. I think first of all, Ontario's population is decreasing right now.
That's true.
Which is insane, by the way. We could talk about
despite
that.
Despite the national immigration, Ontario's population is actually full out decreasing. So that hurts.
Dave came in and gave me this big spiel.
Yeah, I don't want to. We can do a whole podcast on it.
I went home and ate a tub of ice cream.
I'm writing a blog about it. So
I would say so. My take is, and yes, that's definitely a factor. But like one of the bigger things is people just look at what it costs to live, and then they said, "No, I'll just go live with family. We'll go get a place together." So the amount of units needed to house the population shrinks because people are willing to compromise on their living situation. Mm-hmm. So that's what I think really happens when median household income needed to buy the average house doesn't work. Now you just have 2 households.
I also
live
think
in one.
But we also got to keep in mind, I do think there's a component here, and that's a great point, and Dave's point as well. But what I think also is adding to it is the amount of condos that came online and people didn't actually move into them.
There's a ton of that. So the rental inventory,
right?
Like if you think about Ontario, like the only thing still being built is purpose-built rentals right now. That's like it. So all this direct to MLI Select.
It's a lot of rental
type of rental product. That's roaring right now in Ontario. Whereas everything else, all the pre-con sales are completely done. Nothing happening. No movement whatsoever because people don't want to pay more for something that's already falling in value at market rate. So I think that's just the situation right now. And then all those pre-cons that are coming to market, they're all getting thrown into the rental pool for now.
Well, that's what absorption rate. Like it's your building in Burlington was a great example of this very thing, right?
Yep.
I'm lobbing you to tell the story, but
I thought you were going to tell the story.
Over to you. It's your building.
I need a coffee too today.
I'm like waiting.
Yeah, no, it was the Burlington has a ton of vacancy in new build condo, like a lot. Scary, actually, compared to Oakville. It's like Oakville is almost nothing. Burlington has a ton.
Yeah.
Wow. And so we saw that directly affect the rental rates on the buildings I own in Burlington, right? Historically, and I know people that own, and we've analyzed, like 2 bedrooms could get upwards of $2,700 in Burlington for a nicely renovated 2-bedroom in an older apartment building. And then I'm actually renting 2 fully renovated 2 beds at $24,50 now. And I look at brand new condos and they're also going for $24,000, $25,000, right? Even last $23,000. So and there's the argument of, well, you're getting 450 square feet. looking at another condo.
Yeah, your units are going to be bigger.
So my units are bigger. So I actually I'm finding who's leasing my product in Burlington right now. It's actually young families,
Right. They need the space.
Mom, dad, kid,
Yeah.
right? Or there's roommate scenarios, right?
Yeah.
Where we'll get like the 2-bedroom thing really helps out because the 2,400, the 2,300 condo units, that's usually a 1-bed. It's usually 400 square feet,
Yeah.
right? And so those tend to go more for like single people
Single
that
use,
take
yeah.
those units.
Yeah.
Now, in a condo, you're getting a swimming pool, a gym, a party room, a this, a that, right? You get a laundry room and a damp basement, right? That's what you get with me. So there's your amenities.
You know
right?
what you don't have to worry about though is rent control, and like the
That's true.
newer
The new
rental-
product, you
the
don't
new
have it, yeah.
product, right? Like, and that's the often overlooked. They get your unit, that's $2,400 locked in. You go take that condo, and if rental rates start skyrocketing again, it happened all through Toronto. People are getting booted left, right, and center.
Yeah.
Right.
Yeah. So it's just I think
Which
in combination
should
with a declining
it's
population, right? With a declining population and in combination with extra rental product coming online, condo product coming online, Ontario pretty much as a whole getting rid of Airbnb. Right? Like that didn't bring a mass amount of units back on the market, but it did. It brought units back on the market.
Sure.
Because the whole mandate has been pushing rental product. Well, now our vacancy, like even Toronto's vacancy is way up.
Yeah.
Right. There's areas in southwestern Ontario with 4% vacancy rate. Hamilton's almost at a 4% for Pete's sake. Like there's.
Yeah. But even Hamilton, like anecdotally, we know people that are doing a lot of rentals out there, and they were struggling to fill them, and now it's all getting filled. And this is multitudes of property managers feeding us from different sources that information. And it's like, is it just because the product and inventory was out there, all these people buying condos and went, oh my gosh, I don't know what to do with it, cut the rate, rent it, and then that's getting absorbed across the board, and then now it's back to normalcy,
I think people did bring rates down, and with time, we're also in renting season. Summer is renting season, right?
Yeah.
We were looking at a micro climate of just through the winter. We were saying it's almost impossible to lease, right?
Yeah.
Which was true.
That's a great point. Like, anyways, I'll end with this because I'm in the weeds. But additionally, looking at, is this like, where are they pulling this data in? Is this from the last what time frame? Is this the last 3 months, 6 months? What is this?
It does say somewhere if you read enough.
at the
There's
bottom,
also
I think,
a rating
right?
system. You'll see like ABC.
Yeah.
My eyesight is good, but not that good for how tiny that is.
I'm gonna. Anyways, this is a little project for me. This is the stuff I love, but like, where are we pulling data, and how old is it? Because to your point, if this is 6 months trailing, then of course, right? And you would suspect
It starts to come down.
and then does it track out to go up again?
Certainly, I would think like there's less people who want to turn over in the winter, but so that would mean there's less inventory online as well. So you would think that the supply and demand would sort of equal out, but fair enough. In houses, the price goes down. There's that little decline. So, if it was
interesting.
winter
Just the
data,
ratios obviously go up.
Yeah, if it was winter data, summer data is going to look different.
It'd be interesting to see like how many people have moved back home.
Oh,
right.
I think it's going to be a big thing. Like, and I know it just anecdotally as having been an Ontario landlord for quite some time and having like multiple people live in units. It's like multiple generations, the mom and the daughter and the kid, or it's 2 families. I had one that they had 2 freaking families living in one unit, and I don't like that as a landlord because then my the wear and tear is double, and obviously potential drama and all that. So.
Yeah.
But I bet you a lot of landlords listening to this podcast can relate, and they've had multiple families living in one unit, and that they're just doing that to cover their costs because rents are high. Okay, sure, we'll pay it. 2 families in.
Well, one of my clients is a bunch of buildings, but one of them is a 20 unit, and 2 of the 20 tenants were immigrants, and Canada has asked them to leave. Good people, like nothing. They didn't do anything wrong. They're just getting booted.
Yeah, getting booted.
And he's like, it's super unfortunate. And on top of that, they were amazing tenants. So I'm also curious how much of that is a factor as well.
It's I don't really go down the irresponsible government rabbit hole too much anymore, but they just took a tap that was wide open at 1 million people a year and shut it off completely. And they did allow for new immigration, but it was really only enough to get the people who are here on temporary residency to convert to permanent residency. So the net result of new bodies into the country is nil.
Yep.
So you went from 1 million in to nil.
Yeah.
And naturally, Ontario just, embracing the unterrible moniker for the moment, is chasing everybody away to Alberta, where they're getting a 20% tax cut on provincial rate. So, I mean, Ontario, like, I would think there will be a course correct, right? Like, and Canada in general, they're not just going to keep doing utterly stupid things forever, because people will start to get mad. So it will come back around. Obviously, like, huge opportunity from a buyer standpoint right now, looking at it, because everybody's, a lot of people smell blood.
We've got a lot of very good quality buyers that are now like,
let's do it.
Here we go.
Here we go. Now you get to negotiate the deal. It's a buyer's market.
Exactly.
You get to negotiate the deal.
And the belief in Ontario is still there long term. I mean,
long term. I mean, there are people, like, I know of Americans that are actively looking to come and invest in Ontario right now. Because they see the opportunity, dollars down. They know the long-term potential of Ontario.
It's there.
Yeah.
So let's model CMHC on top of this. So this is a direct to CMHC deal. We're showing buying at 3.3 million. And again, this is kind of the number where I start to like the deal, where it starts to make sense.
And you're just a turnkey straight to CMHC, 85%.
Turnkey, there's still a lot of lift, right? Because if the average is 1,700, 2,400 is the rental rate. So, I put a 6 cap on exit, still $4.5 million.
Okay.
So, we're probably.
So there's some lift.
And Dave, have you had any pushback going straight to CMHC anymore these days, or is it pretty much a given?
It seems like right now the only groups that are doing deals are the people who live this world exclusively, right? All the other, like, our quote unquote competition, and everybody knows, like, there's such ease with conversations, because I'm doing a deal with an agent. This is our 4th deal. It's direct to CMHC. And it's funny because I have a standard that I start with on, like, my hopes and dreams offer, and then it gets called back sometimes, right? And it's funny because he's like, you just keep swinging at it. I'm like, I gotta try. So the reality of being in the driver's seat with the buyers is, this is our number. If you don't want to do it, we'll just move on. You're the pretty girl at the dance now, and it's just off we go. And if you want to do it, it seems like CMHC direct.
But going direct, you're hitting, right? Because I know, like, historically over the past 3-4 years, it was rare. It was like, oh man, we got a straight to CMHC, right? Like, it was a big deal.
It was during the show, we were having conversations of how you can't have conditions.
We'll go back far enough. Like, that's actually a fun experiment. Like, go back far enough, you'll see the whole change of the market. All of our conversations.
Dramatic change.
I'm getting older. I'm gray now. And
because I entered your life. But to answer your question, like, we are doing a bunch. We have had pushback, but the ones we get pushback on, we leave, and now we're starting to see the value add conversations come back. They're back now, right? Where,
like, a Burr type deal,
because the Burrs are.
They require you to be able to get a good enough price on the buy, which now you're starting to get those prices.
Because the guys and gals that have been holding on to these buildings, there's a boatload of vacant buildings that have been vacant for 2 years plus. And it is sort of succumbed to, like, oh my gosh, market seems to not be recovering. I need to get rid of it. And get kneecapped on price. So, anyways, $640,000 capital required. That includes everything under the sun. 85% loan to value.
Is there a reno needed or no? Like, that's just that's just getting in.
Just picking the deal up and sending it to CMHC and closing.
Perfect.
On it.
All right.
Exactly as is.
So it is fully occupied right now.
Fully occupied. Okay. We have done no improvements, no additional adding values.
Do we know how bad the units or good the units are?
Value, they're really good shape.
Good?
Some are a little dated, but, like, nothing you'd need to even do anything.
You don't need to do anything yet.
What's our cash on cash, Dave? Hit me with it.
Cash on cash is 4. So, we've been seeing the 5s outside of big markets. So, a Waterloo with this type of lift, 4% cash on cash, I really like it.
And Waterloo's always, like, Kitchener, Cambridge, Waterloo, maybe not Cambridge, but Kitchener and Waterloo have always been that one of those elusive markets where, for some reason, the cap rates have always been compressed there. Like,
it's a hot market.
It's always been a very good market.
It's on the corridor, right? So close to Toronto, you're right on the 401 corridor.
There's just a lot going on there. It's not
good employment nodes.
Yeah, there's a lot going on, right? So this is kind of has a good amount of lift to it. Still quality deal, good cash on cash as is, ways to improve, ways to make it more efficient, but it's a great deal.
Yeah. Very cool. Any other sort of high level takeaways? I know we've been all over the place on this one, but
Did you do an ROI year one there?
So it's fun.
Sorry, I just can't see it. I'm not trying to pick apart your.
So
spreadsheet.
we're actually we were just having this conversation with another client with a mortgage broker, which is we don't show mortgage pay down, any of the key metrics under which you want to buy a deal. We're just not showing them because we're not. This isn't the sales sheet. This is the framework under which to sort of
to get the deal financed and all
to
that.
show which deal we want to even talk about.
Right.
So this particular client was like, I really want to see it because they have a very large investment portfolio and they want to start doing some comparisons.
Yep.
So we're actually going to build out some stuff, which is super easy to do anyways. But
it is. Yeah, on my sheet, I do the average of the first 5 years of mortgage pay down, and that's so take 1 year of that. That's in your annual return.
I'm just going to rip that off your sheet. We can put it in this.
And then do the I just like a 1% appreciation. Of course, in Ontario, maybe you just want to do 0. Which when you do that, you're going to see that the overall return is hurt by that. So then you need to sort of compensate with either cash flow or upside
But
being able to get the deal
peeve
up.
is when people get really. I think I've talked about this before, but they just take that like passive appreciation number and they're like,
well, I mean, I think for a long time,
yeah, that looks good.
for a long time,
you can work numbers backwards.
Yeah, exactly. Like, hey, what kind of overall return do I want to show? Yeah, exactly. They just increase the appreciation because you can make your return say whatever you want.
Yeah, it's like if the market wants a 25% return, you'll get a 2% cash on cash, very little principal pay down, and then you'll just be like 3.5%.
I'm looking at stuff in the U.S. right now, and anything we're going to buy, we're like, okay, what's our refi strategy? Like, we're negotiating seller finance, and we want to be like 7 years minimum because we have no idea what the market will do in the next 5. It could be down.
Right.
But we want to get good pay down over the next 5 years so we can go back and refi. And
but if you were like, if we did the old famous index chart and zoomed out on any 10-year period in real estate, you're up. So
in nominal value, you should be up, So knowing
to put a 0 handle on appreciation
in any 10-year period,
it used to be here. We'll look at it right now. That's LinkedIn. Can I pull that up? Can we zoom here? Not for print.
That's okay. We don't need to print it.
Can't read it though.
You can zoom in.
My eyes weren't working there, boys.
You're probably right because I heard even in the 90s that it had recovered by like 2001 or something.
This is my favorite chart at the bank. Every time you sit with a banker, they got this on the wall.
So this is my banker
and I just stare at it.
This is my banking
like,
days. This is why I know this.
Yeah.
So but the reason I hesitated was that was my whole thing before of what I used to look at and know. I don't know if it's changed. I highly doubt it. But
so if you got in nominal terms in 10 years,
real estate on here.
I mean, it should correlate with the other assets more or less.
Look at these buggers, eh? Growth portfolio, Canadians. They took real estate off because it was so beautiful. There's inflation. Wild though. So you could run it. It would have the sort of 10-year chunks. See here.
I mean, it would follow those lines more or less, right?
So even if you take a Canadian stock portfolio, like here's the 70s to the 80s, right?
Yeah, it's up.
Yeah.
Note the big dips, right? The big dips don't last that long. Although if you look at the peak there, when's that peak there?
Which one?
Is that the 90s? Is that 1990?
Yeah.
Yeah, so that peak.
No, that's 2000. That's
okay,
2000.
so 2000, when did it get back up? If you go.
Oh, so here 2000 to 2010, it's not.
It's not even back, yeah.
But here's a Canadian stock portfolio.
That's not real estate, right? That was something else.
Yeah. That's a worthy exercise to find this one for real estate.
That's a task for ChatGPT.
Yeah. Another call, another podcast.
Yeah.
But it's, in any event, zooming out and just being the difference between what you're trying to accomplish in the sheet is like, we're not trying to predict exactly where you're going to end up. In fact, quite the opposite.
Yeah.
We're building this massive filter with a whole bunch of stuff to funnel out all the trash that's out there to talk to, here's a good deal. And if you have to layer in all these things to make a deal work, it's not a good deal.
Yeah.
So don't do it.
Yep. Yeah, that makes sense. I mean, I like to just see what the overall look might be, even if it's negative depreciation.
Yep.
Sorry for the yawns. All right, guys. Thank you so much for sticking with us. We're well in on this one. But I like this. I like the mix of just banter with analyzing a deal.
I feel like, sorry, Dave, we gave you a hard time to get through that sheet today. He kept trying to rein us in.
I tried to corral the cats back, but this is the ADD episode.
Oh, it's good.
I think it was great. You know?
This is like every episode of the podcast I ever did for my podcast. So
I don't know. I think people appreciate it.
Yeah, I mean, it seemed to work. Anyways, we appreciate you for being here. And if you are interested in being on the insiders list, you get access to the off-market deals that come through the office here with these guys and give you an opportunity to get a little more connected with them, take a moment and join that list. It's bottom of this video if you're on YouTube, or in the show notes if you're on the podcast platforms.
Yep.
And outside of that, just show the channel some love. Share this video with somebody you think would appreciate it. And we'll see you again next week.
See you then.
Thank you.